ladies and gentlemen. My name is Sasha Star. It's a modern investing on Pod TV. And our guests today are Dr. Milan Somberg. Welcome to the show, Milan.
Thank you for inviting me. Delighted to be here. I hope I can contribute.
Oh, you always do that. There will be no difference today. And also we have Jim Ead from Ead Foundation. Welcome to the show, Jim.
It's my pleasure to be here. Thanks for inviting me.
Yeah. Okay. So today we are all waiting decision on interest rates in the market. So the market it was slightly positive in the morning, and now it's in the neutral mode. But we'll see. It's not even so important as whether they will raise 25 basic point or they will remain the same. It's very important their guidance, what they will say they're planning to do in the future. So we'll see how market will behave very shortly, right? I think after our program will be over, we'll figure out what's happening. Milan, how are you doing these days in the market?
Well, I have a couple of points I'd like to make. How I'm doing in the market is I don't have any money in the market that I'm going to need in the next 2 or 3 years, and that should apply to everybody. Being in the market has given investors the greatest returns of any other investment options that are available, unless you cherry pick. So, I have a friend I mentioned earlier who bought a violin at the start of his career 50 years ago for the price of one Toronto house. First the violin, the house is secondary. He just sold it for the price of 3 Toronto houses, $10 million. For every $10 million violin, there are millions of others which are worth next to nothing.
How many violins did he buy at the time?
How many violins did he buy? Over the course of his career, he has owned 50 Stradivarius and Guarnerius violins.
So he was trading them?
Yeah. And so that's unmatched in history. And he had a brilliant career. He was the concertmaster of 3 major orchestras before age 28.
Wow.
But interestingly, though, what he said is, he said, I can't ride a bicycle, I can't swim, I can't play tennis, I can't do anything because I spent my whole life practicing the violin. And so, Sasha, being a musician yourself, that the more you practice, the better things get if you practice correctly. Famous violin teacher from Odessa, Leopold Auer, said nobody needs to practice more than 3 hours a day. 1 hour of exercises, 1 hour of scales, and 1 hour of repertoire.
Well, scales is a part of exercises in a way.
Yeah.
I wouldn't be so stringent.
So how am I doing? Well, I don't have any money in the market that I will need in the next couple of years. I made that point earlier. The market, unless you cherry pick, has been the best place to invest over the last 200 years, the American market. That's important. So we tell our members that Monday morning we have about 300 members to invest only in the American market because it has given the best returns over the last 200 years, and it's likely to continue doing that. So now a couple of things that I wanted to mention today is that for 4 days, 23,000 participants from 90 countries gathered in Cannes to discuss real estate. The world's largest real estate conference took place. And the S&P 500 has a real estate sector, which is down close to 19% over the last year. But the conclusion of these 23,000 participants is that things are looking good. So it's a good time for us to be investing in the real estate sector of the S&P 500. The S&P 500 has 11 sectors, one of which is real estate, and the companies listed there, about 30 of them, have liquidity. The trouble with real estate as an investment is it lacks liquidity if you invest directly. For instance, my wife and I live in a condo which we bought 6 years ago, which was on the market for 3 years. Now, if you had the same amount of assets in the stock market, you could buy it or sell it in a fraction of a second, not 3 seconds, fraction of a second. So that is what's missing in owning real estate directly. But owning the 30 or so companies which are a part of the S&P 500 real estate sector, it's a different thing. You can sell them instantly, buy them instantly with low transaction costs. So that's the one thing that I came up with over the last week or so since we talked the last time. Investing in the real estate sector now is a safe and a promising thing to do, according to these 23,000 participants who met for 4 days. If you invest in individual stocks, which we don't recommend, as you know, we keep talking about investing in the United States market as a whole. So that's the one thing there about real estate. The other thing is, you mentioned the last time, Sasha or Jim, one or you, both of you talked about the S&P 100. I checked the S&P 100 and the chart for the S&P 100 and the S&P 500 identical. Except now the S&P 100 price of a share is close to $2,000. So you need 100 shares in order to do derivatives on it, to write covered calls. You need 100 shares. So that's close to $200,000. And many beginning investors can't come up with that kind of money. The other thing that I notice about the S&P 100 derivatives is there's a very low open interest and volume, and the bid-ask spread is enormous. So I'm not sure that we need to invest in it. You know, the chart, as I mentioned earlier, is identical to the S&P 500. So what are the advantages of the S&P 100 over the S&P 500?
Jim, would you like to review?
Oh, well, I would say first off that I never suggested that the S&P 100. I think Nick did. And I don't see any advantage of that. You know, the idea was that you would get the top 100 of the S&P 500, and that's not the case. You just get the 100 largest, and that, you know, as you say, the performance over time is equivalent. But what you're talking about in terms of the ability to buy in, that would be a deal breaker for many people. And so it doesn't sound as attractive. And especially when you speak about the volume, Sasha's made this point many times, and in particular about the spread. If that's punitive compared to another alternative, why would you do it? Why would you consider it? No, I think the approach that Sasha takes and the approach that you take all have merit. Both have merit and are both wise. As long as you're disciplined and follow your rules, you can be successul either way.
And not try to do both of them.
And don't do both, right? And don't swap between plans. You know, as a chess player, we always said that a bad plan is better than no plan at all. But don't change plans in midstream. You know, what you wanted to do is to continue your plan unless the situation changes and you have to reevaluate. And with my portfolios, I have to reevaluate every now and then, but not very often, because, you know, what I talk about is the allocation of funds. You know, am I in cash? Am I in stock? There is one part of my portfolio exploded. Hopefully it's not gone down, but it's exploded and is now dominating the shares of my portfolio. It's invested in one sector. Then I'm alarmed and I want to reevaluate. And so you're talking about real estate. That's a sector. Now, I used to be able to, I studied REITs for a while. I was tracking that. That's a way to invest into real estate. And I found that I wasn't very attracted to those. I wasn't very impressed by their performance over time. So I never did. But I haven't looked at them in a long, long time. That is one way to invest in real estate. But I did it primarily by buying single home. And that is a big part of my overall financial work. So, you know, that's my participation in the real estate market. And I feel like that is more than sufficient. It's taken up a good chunk of my investments.
Were you buying single homes in San Francisco, Jim?
What I did was I started out with a townhouse in Oakland, And then I upgraded to a condo in Pacific Heights in San Francisco. And then I bought a single family home in Menlo Park, California, which is on the San Francisco Peninsula.
You did well there, right?
I did well in all cases, yes.
Yeah. Would you have done as well had you invested in Detroit?
That I don't. I have no knowledge of the Detroit market, so I suspect from your question that the answer would be no.
That's right. You're actually investing in real estate has had half of the returns, generally speaking, because for every San Francisco, there's a Detroit. For every Toronto, there is Sault Ste. Marie, and so on.
Of course.
Yeah. So you happen to be in the right place.
Well, it said location, location, location. That's always been the key.
Right.
Yeah. But also, I wanted to ask you, if I was lost in New York City and I asked you how to get to Carnegie Hall, what would your answer be? Practice.
Yeah.
So it's the same thing with everything. Is like you want to teach yourself, you want to learn, you want to become knowledgeable about whatever it is. And I stay away from things that I know nothing of. And so I try to keep them, if I wanted to invest in real estate, I wouldn't pick the Detroit market for any reason whatsoever because I know nothing about it. Yeah. But in the real estate, I actually lived in the San Francisco Bay Area. So of course it was in my interest.
Sure.
But when back in the 1980s, it was a good, solid bet. I mean, you had to really believe there was no other way, people were coming, prices were going up. And, getting in, even as, I scraped together I pulled everything that I had together to get the down payment, to get a townhouse in Oakland. And it was so worth it because in a couple of years, I could convert it into a condo in a lovely neighborhood of San Francisco. A prime real estate location.
One of the great advantages of investing in real estate is that you can do that with very little money. The down payment is just a fraction of what you are buying. So borrowing money to invest in something that will appreciate makes a lot of sense. And every company issues bonds, which means they're borrowing money, hoping that the cost of the money will be smaller than the returns they'll get from investing in that. So that has worked very well for most people, unless the investment tanked.
Yes.
Yeah.
I know my father, for example, my father never made any money in real estate, and he was always buying and selling based on his work, traveling to a new location. It was never a question of buying into it was never a conscious decision as an investment. So,
right.
There are ways to go wrong investing in real estate, but
There certainly are, yeah.
I think you have to live someplace. Might as well own.
Jim, there is a question to you and all of us actually about investing in Durham area. It's a growing market. That's what Mark believes. And new buildings are popping up left and right. So maybe we should invest some money in the Durham real estate, which I don't know much about that and pros or cons. I don't know who is an expert in the Durham market. Maybe
that's a problem for me. I wouldn't know anything about the market, so I wouldn't touch it. But it might be a great investment. I have no knowledge. So.
We have what I call the Toronto effect. Toronto housing is so expensive now that there are bedroom communities of Toronto which are more than an hour away, and so people are willing to spend that hour driving to and from work. That's 2 hours a day in order to be able to buy at a lower cost. That's what I call the Toronto effect. And Durham is a part of the Toronto effect. It will grow and continue to grow because people can work in Toronto where the jobs are and live in Durham and make that drive. Yeah.
I think we're talking about two different Durhams, but
we could be. Yeah.
In any case, there's also that effect. I knew people that drove 2 hours each way in order to be able to afford to buy someplace to live in the San Francisco Bay Area, and it's a quality of life issue at that point.
Maybe these people love driving, and
maybe, but I would never do that. I personally, because I don't like driving.
Years ago, I found out that the average Russian spends 8 hours a week buying eggs in one location, and you buy 3 eggs at a time, not a dozen, and they're buying butter in another location and buying meat in a third location. They spend 8 hours a week doing that. Then I found out that the average driver in North America drives 8 hours a week to and from work, the average. So what really is the difference?
I like American way more.
I do too. But in any case, it is a quality of life balance that you need to achieve when you're doing these things. But there's no question that when you're starting out, you can't buy in a hot market. You can't scrape together. I couldn't scrape together. And I bought into a nice neighborhood in Oakland, but Oakland was less desirable than San Francisco. So these are the things that you have to weigh, especially when you're getting started out. And when you own, then you're in a position of strength. At least my wife and I were in a position of strength because we did not have to purchase a home.
The quality of life issue is really a major one. I have a son who has an engineering degree and an MBA, and he's a Google products expert. And most of his income comes from being a Google products expert. And recently, he decided he will take a smaller income in order to be able to spend more time with his family.
Yes, that's a wise choice for so many.
Yeah,
if you can do it. But for us, it was like my wife went to Stanford. Her whole family basically went to Stanford, and so we moved closer to Stanford University and into that community. And it was a great choice in terms of just financially, because it's tripled since we bought it. But that's because Facebook, Google, and these big tech companies moved into the area, and they paid their people, and they all moved in, knocked down perfectly good homes, and built up these bigger, better homes.
they bought the lot, really, not the home.
Yeah, they bought the land. Yes, absolutely. And that was and we were I couldn't walk my dog without passing into construction site. So
There is a question about rental investment clubs, and what are our thoughts on that? Again, I'm not an expert in that area. I was very successful in real estate, but almost by fluke, or by, I don't know even what factors. Simply, at one point, I was forced to buy real estate simply because I had a windfall from penny stock profits, and at that time, I didn't have any idea what to do further with the stock. So I bought enormous house, which I've never even moved in. I sold it almost upon completion of the project, and I invested $20,000 just to get in, and I sold it for $110,000 without moving in. So that was a great project, and then I had a very
Tax-free also. In Canada, that was tax-free.
yeah. I didn't worry about tax implications. I just had to place the money somewhere. However, there is another situation when Toronto market dived in the early 90s, 1991. I know some people who were buying in the new projects condominiums. They were buying 5 condominiums because all they had to do put 20,000. So for $100,000, you would own 5 condominiums, which would be ready in 2, maybe even 3 years' time. But you know what's happened is when the market dived and they were forced to close the deals, and they didn't want to do it, so they were willing to forfeit their deposit, but the builder took them to court to close the deals. So that was quite a devastating effect. So there are some cases where you can lose a little bit of money in real estate, especially when you're so bullish and your timing is not right.
yes,
Things can happen.
timing. And it's also the employment. Like now, people are starting to leave the San Francisco Bay Area, and since the pandemic, the people found that they can work remotely, and so all of a sudden they're not willing to pay quite the enormous cost of living in this area, so they can live almost anywhere and still work and be employed.
Yes,
And that's changing things tremendously in the market, real estate market.
What you mentioned earlier, Jim, is William Zeckendorf, the founder of Trizec Corporation. said, as you mentioned, you're quoting Zeckendorf, that the three things that matter most in real estate are location, location, and location. And with these changes where people can work at home to some degree or some extent, that still applies. That still applies. Now, there was a Nobel Prize winning economist, Robert Shiller, who maintains real estate prices on 20 cities in North America. 20 cities, Robert Shiller, look at the Shiller Index, and you'll see that they're doing about half as well as investing in real estate does. Because as we mentioned earlier, for every San Francisco, there is a Detroit. Yeah, so Shiller, look up Robert Shiller. Our viewers, if they're interested in real estate, could take a look at these. The real estate sector of the S&P 500, there are about 30 companies there with high level of liquidity. So they can look at that. They can look at REITs. You said the REITs, you didn't do well in REITs. REITs were set up to make money for somebody who set them up, not for investors to make money.
Yeah. I didn't invest in them. I tracked them.
Yeah. But many people did well in REITs. But Robert Shiller's index, the Shiller Index, you almost have to look at it if you're going to invest in real estate.
Yeah.
Well, investing in real estate, I do believe that investing in single homes, like Jim did, is a very prudent strategy, and I can bet it's just as successful as any other investment, even violin or so. And however, I must say that investing in the public companies, it's a little bit different proposition, because you must investigate the management, that there will be no funny accounting discovered sooner or later, and so on. So you depend really a lot, or even interest rates. If they will keep going higher, then that area may suffer somewhat, because there will be additional expenses, both on builders and home buyers, as mortgages will be at much higher figures or so on. So I don't know. I'm myself keep away from that period, simply because when you have a stock like Nvidia, why would you spend so much time and money on real estate projects where, as a matter of fact, I wanted to mention that this month in May, we have earnings from Nvidia and also from AI, artificial intelligence, and the companies that I mentioned last time is just a moment. Let me see something. How they're doing today. Unity Software also has. Now this stocks another stock which what I'm looking at now. I started to build up position is Palo Alto Networks. Again, I'm very careful. I'm buying some shares and selling covered calls. So this one, I'm a little bit in a loss on shares, but I'm doing quite well on covered calls. But again, you have to really have a reason why would you buy one stock or another. And in my opinion, earnings is driving engine of reporting and price movements on the stock. So I'm okay with that, and I started to augment my position on Nvidia. Again, at this time, I'm selling covered calls, but in a week, maybe week and a half time, I will continue to buy Nvidia, but I will not sell covered calls simply.
Sasha, the idea of selling covered calls has the benefit of you own the stock. So if you own it at the right time, you'll get a dividend from it. Selling covered calls, you own the stock, you collect dividends. The risk equivalent of covered calls is cash secured puts, but you never own the stock, and so you never collect the dividends there.
That's a good point.
Well, you have a dividend, but it's paid to you upfront. The moment you sell the put, the cash covered put, you get dividends upfront right on your account at the moment when you do it. It's even better.
It's not really a dividend; it's a yield that you get from selling the cash secured put.
Yeah, but same applicable to covered call. You also getting a premium right upfront on
That's
your
right.
account.
Yeah.
I treat it as the payment for the risk I'm taking of owning security. There must be either dividend that
Yeah.
the company pays, or I'm selling covered call. There must be something. I must be paid to hold the security. I will not do it for free. I refuse.
The
Yeah.
risk, the risk in derivatives entirely comes from the security that's connected.
Absolutely. Yeah.
Because, yeah, that's right. So that's why we encourage our members at Monday morning to buy the American economy as a whole by buying an exchange traded fund which tracks the S&P 500. Then you're buying the American economy as a whole, the strongest economy in the last couple of 100 years. The risk is minimal. Yeah, there will be weeks where the losses will exceed the premium income for sure, but it doesn't matter so long as that premium income throws cash your way by writing that cover call on a Monday, expiry date Friday of the same week. You can ignore the fact that it's going to move up and down, sometimes as much as 30%. So long as you don't have money that you'll need next year, 2 years, or 3 years from now tied up in there. Yeah.
Yeah. So as a long-term strategy, it's sound strategy.
Yeah.
I would employ it in my core portfolio.
Yeah. Yeah.
I just believe that high-yield dividend stocks even better because you collect real money guaranteed, and some of the stocks that I own, they pay monthly. So every month, I think Gabelli Investment and Income Fund, they pay on 10th of each month. So I know that on 10th of it, I'm getting a few $100s, but it's there all the time. Now the stock Gabelli's fund, it's moving. It was as high as $27, and it was as low. I bought it when it was $16. It's now about $21. So it's nothing substantial about it. That it just pays every month. That's to me a great consideration. And
What you're talking about getting paid for taking a risk, I think this is one thing that we must emphasize is it is essentially risk management, what we're doing, what we're
absolutely,
talking about. Yeah. And it's one thing that the Silicon Valley Bank, for example, did not manage its risk well, and it went under. And I guess First Republic is also been now taken over by the federal government and then sold to J.P. Morgan.
Right, J.P. Morgan, yes.
Yeah, and so another consolidation of a bank into a bigger bank. So it seems like we have this cyclical effect of small banks coming up, going under, being taken over, and the big banks getting bigger again. And I don't know what this means, but the banking sector and the confidence in it has been affecting the markets. There's no question about that. And it's that and the interest rates and what the Fed's going to do that have been the two pressures this year, at least recently, that I have seen affect the market. And neither one of them changes my long-term perspective.
Yeah.
Although I must say that all this banks' troubles attracted a lot of new investments in crypto. So people believe that the banks are all incompetent managers, liars, and so on. And in crypto, there is no such thing, and your money is safe. But in crypto, there were also some cases where well-known, publicized cases.
Yes.
There was outright fraud, stupidity,
Sure. Yeah.
greed, and many other things. So in a way, there are some outlets that you don't have to invest in the crypto funds, but you can buy individual crypto and hold it. But again, I just don't believe that there will be
Question.
from all investments, including gold, that all the money will go in crypto and there will be a demand driving crypto. Some people believe 100,000 a piece, some people believe it's 1 million a piece, and so on. I just don't see how it could materialize. Maybe
Yeah, if I was 40 years younger, I might be into it. But right now, I just don't understand it well enough to predict the future effects. And I'm not convinced, from what I understand, that these upside potential will happen. You mentioned gold again, and last week Milan asked me, why would you invest in gold? It goes up a little, goes down a little. It doesn't really affect your overall management. It's really a hedge against catastrophe. And if if a terrorist state like Russia and Putin started using nuclear weapons or something like that, the money would flow into gold. And, so that it's one of those things where I, hedge my overall portfolio against catastrophe.
You can invest 3 to 5%.
It's not a big
3 to 5%. What does a 3 to 5% holding, what can it do for your overall portfolio? Next to nothing.
Next to nothing, unless it's a catastrophe, and then it becomes a substantial part of it.
Question for you, Jim, for you, Sasha, is some people have made a great deal of money in cryptocurrencies, and some people have lost a great deal of money. Overall, are cryptocurrency investors winners or losers overall?
It depends when you started. Those people who started 6-7 years ago, they probably are winners, most likely. And people who started recently, all of them are losers for obvious reasons, because the crypto was 50, 60,000 a piece, and now it's around 30. So there must be losers. It depends. Now, there are some funds that you can invest. Like one is Bito. It's trading as a stock, and you can invest, and you can. It's quite liquid. But again, you see, for some reasons, it doesn't have earnings, right? It doesn't pay any dividends. It doesn't pay anything. So for crypto to go higher in price, there must be a huge demand for crypto for various reasons. It doesn't matter what, but there must be a reason. And very few people will be induced to sell. So when there is a huge imbalance between supply and demand, the crypto then go higher to higher price.
I like the philosophy behind crypto. In other words, the central banks have been controlling things, and you make electronic payment and it doesn't show up where you're sending it for a couple of days, and they just hold your money and invest it in for themselves. And so it's an idea of, why don't we get away from these central banks? Why do we actually need them? And with the technology that we have right now, the answer is we don't. But with cryptocurrency, with everything else, it boils down to, do you trust it? And right now, to me, it's the wild, wild west.
You said, Jim, that if you were 40 years younger, you might take a closer look at crypto. And we tell our members on Monday morning, 300 members we have, is if you cannot explain something to a 12-year-old, don't get involved in it. And so I could not explain cryptocurrencies. Why do they need so much energy, for example? I couldn't explain that to a 12-year-old.
That's the downside. That shouldn't be overlooked. Absolutely, they are energy hogs. Colossal use of energy in a time when we can't afford it. So unless they come up with some other solution, it's much like the electrical vehicles and their batteries. Their technology is improving, and some of the consequences, the downsides of their batteries, are being solved. And if they can solve this cryptocurrency demand of all that intensive resource energy generated to create it, I can't support it for that reason alone.
How many people are into cryptocurrencies because they have something to hide?
Oh, it's like Swiss bank accounts, Cayman offshore accounts, in general. It's absolutely, there's an element of that.
Okay, I'll tell you that in practice how it works, because at one time, a few months ago, I was interested to buy Bitcoins. And I opened an account with one of the Canadian companies that is taking your wire transfer from the bank, for example, and for this money they would purchase on your account crypto, say Bitcoin. At that time I was interested to buy 2 Bitcoins. Now, first of all, it's a very tedious process to open an account. They're asking you a million questions, and you need proof of where the money is coming from, and from my bank. How did money came to your bank? From where? What's the source of your money?
Yeah, that's not their business.
Then you have to declare almost all your biography, where you born, and so on and on. So after all this questioning, once I finally opened the account and I deposited the money. At that time it was almost $60,000 for 2 Bitcoins. And then I wanted to transfer this to Bitcoins to another institutions that I wanted to do some stock trading overseas. That for 2 weeks, they were questioning what kind of company is this and where you transfer. I said, hold on, wait a sec. I believe that it's my own money, or in this at this point it was crypto, which I own. So all I give you directions
Yeah.
where to transfer this. No, 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 no. There was the company who ownership, who were the managing directors. How did you find out about this and all that stuff? Finally, when I had no choice but just to get return of my money. So I asked them, please sell Bitcoins, and once it's done, I will request to
Ask,
transfer the money
asking,
back.
asking you all those questions is an expense to the banks as well, because
Yeah.
they have to spend so much time. It's imposed on them by the government. Government regulations. Government wants to know where your money comes from.
Well, in this case, it was not the government; it was a private company which specializing in cryptos. And at that point, okay, you want to suggest that they exchange this information with the banks or with authorities like government,
they have to.
similar to IRS or anything like that?
It costs the money to put you through all these questions, doesn't it? They have to have highly paid people asking you these questions and responding to your.
And it's purely administrative cost. It's not worth anything, and it's just a cost. There's no.
But there is something interesting that when you are buying crypto, actually, I made profit on crypto because when I bought it and when I started to get it back, crypto went up somewhat. I bought it at maybe 18,000. It went up to say 21,000 in that period of time. But it wasn't my intention to make profit on crypto. I wanted to do completely different transaction. So on the accounting side, I found out that in fact I lost $400 instead of making 3,000. So I started to question them. Where is my money? They said, well, because they're advertising that there are no fees, there is no
Yeah.
new expenses, so on. Apparently, there is a spread. There is a spread when you buy and the spread when you sell. And the spread eats heavily into your profit if there is any. Okay. So, and I asked about spreads and it hasn't been advertised anywhere, and I was not aware of any spreads. Oh, well, you have to really read our prospectus.
Yeah.
On the page 28 at the bottom, they say something about
the large print giveth, and the small print taketh away.
I made this mistake once, and I got into a mutual fund or something that had no fees and initial fees, and I thought that was a good deal. But then I found out that they could charge what they called an inside load, which meant that there were internal fees. He didn't charge you on the front end or back end, but while they were holding your money, every transaction they did within that, there was a fee associated with that. So they can really, you really have to pay attention because they're out to make money. They're not out to make you money.
Yeah. So something about crypto, there are certain pros and cons, and I'm familiar with some of them.
If you make money, that's okay, but it's not that important.
Yeah.
and they make money every time. And I have a list of hidden fees, and it's about a dozen examples long, which I'll discuss the next time we're together because we won't have enough time today. But when I think of what I call legal crime, hidden fees are an example of that.
Right.
Absolutely.
People get ripped off. There's no other way to look at it. They get ripped off because they're just sold something that's not true. And
with that, we are close to the end of our program. I'd like to remind everybody that this coming Friday, just 2 days from now, we start this Collingwood chess tournament. It's a really great deal for us all. And I wish it will be a very, very successful tournament, which will become part of Canadian and hopefully even international chess life.
Well, I want to thank you, Sasha, and you, Jim, for supporting the Collingwood Chess Festival. I have to tell you that a turnout is greater than we expected. And there's so many things that people can do in any one day, they can do more things that would take a whole year to do them. Visit hockey games, and go to operas and museums and visit relatives and so on. And yet we're doing better than we did last year to a large extent. Thank you for your support.
You're very welcome, and good luck again with this chess tournament, and have a good week of trading, and we'll see you all next Wednesday.
Thanks again.
Thank you very much, everybody.
Bye.
Bye-bye.